If you've been watching SanDisk, SNDK, lately, you know it's been a rocket ship. Up over 1,500% since its spin-off from Western Digital last year. But right now, we are seeing a classic supply shock. Western Digital is finally exiting their remaining 7.5 million shares, a $3.09 billion offering. When a block that big hits the market, it creates short-term indigestion. We've already seen the stock dip from its $725 highs toward the $600 level. This is exactly why I'm looking at an options play that capitalizes on this temporary weakness, while keeping a massive margin of safety. I'm planning to sell a naked put with a $300 strike price for May 2026. Why $300? It comes down to basic valuation. If you look at fundamental reports from Morningstar and Investing.com, they have fair value estimates between $670 and $690. By selling the $300 put, I'm effectively saying, I'm willing to buy this stock at a 50% discount to what the experts say it's actually worth. Even in a bear case where the AI storage hype cools off, SanDisk is no longer a debt-heavy division of Western Digital. It's a lean, independent pure play on NAND flash. The demand for data center storage isn't going away by May. By picking a $300 strike, I'm positioning myself well below the technical support levels and the intrinsic value of the business. Now, on the other side of this trade, I've also got a sell call at the 1080 strike for September 2026. This creates a massive range for the stock to move in. I'm betting that while the long-term upside is huge, potentially crossing that 1,000 mark by the end of the year, the $1,080 level is a moonshot that acts as my profit ceiling. By selling both, I'm collecting premium from the people who think it's going to zero, and the people who think it's going to the moon, while I sit comfortably in the middle where the actual value resides. The most important part of any naked put strategy is the exit plan. What if I'm wrong? What if the sector crashes and SanDisk plunges toward $300 by May? My plan is built in, the roll. If the stock tests my $300 level, I'm prepared to roll that position out to September 2026. Because of the high volatility in SNDK, it has a beta of nearly 5.0. There is a ton of time value in those out-of-month options. I can move my strike even lower, down toward that $235 to $260 absolute floor that analysts have flagged as the rock-bottom bear case. In short, I'm using the Western Digital sell-off to enter a high probability trade, backed by solid fair value data, with a clear escape hatch if the market turns south. It's not about catching the top, it's about owning the floor.